Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
All right, folks, so here's your latest look at the markets, and here's where we've got a bit of a tumble for the S&P 500, down 0.3% to 6,052. The Dow Jones Industrial Average down as well, 0.5% to 44,368. The Nasdaq Composite pretty much flat, just a slight narrow gain of 0.03%. For more insights, we are joined by Chris Weston, Head of Research at Pepperstone. Good morning, Chris. How are you doing today?
Yeah, I'm very well. How are you?
Awesome, Chris. I'm doing well as well. So let's jump straight into what's driving the market action right now. And it does look like inflation back into the conversation as we look at the latest CPI numbers. Walk us through what are your takeaways so far.
Yeah, I mean, I think we're probably already on edge after what we saw on Friday with the University of Michigan one-year survey for inflation expectations, which jumped a whole 1 percentage point, 100 basis points. I mean, that was sort of set us off to the sensitivities around inflation. But if we have to look at the core inflation numbers that came out in the US, yeah, we saw them coming out 0.45 of 1%, unrounded, which was obviously a lot hotter than what the market was looking for. It was sort of going right into the top end of any of the expectations, to be fair. We did see a little bit of a rise in core goods, but it was the core service numbers, I think, which was really pushed up about 0.7%. Hotels and motor insurance really behind that. And then the core number coming 0.7% month on month as well. So that obviously a bit hotter than the market was looking for. Now, I think there's a sort of a disparity between where the economists are seeing this and also where the markets are seeing this, because the economists are saying, well, look, hang on, if we take the various components from the CPI basket, we've got PPI tonight, then we're seeing core PCE inflation, which of course the Fed set policy to, tracking currently around 0.35 of 1%, which isn't too bad when you've got a run rate of 2.6% year on year. The markets, on the other hand, have taken this pretty badly, and we've seen a pretty punchy spike up in Treasury yields. Rate cuts in the US have been pushed out, and equities initially dived and came back a bit. But yeah, so it's certainly a worrying number there.
Yeah, Chris, the hotter than expected CPI numbers pretty much goes to Fed Chair Jerome Powell's point that the Fed is not rushing to change interest rates, right?
They're not, no, absolutely. I mean, the market now, if you look at pricing in swaps, interest rate futures are now saying the Fed are on an extended hold. We heard that from various Fed members as well. And the next full cut, 25 basis point cut, is not being priced now till December. So that's been pushed back a bit. Obviously, we've seen 10-year Treasury yields pushing up 9 basis points into 4.62. So, the rates markets, bond markets taken this badly. And I think equity generally doesn't mind rates to be priced out and being pushed back as long as it's driven by growth data. If it's driven by higher inflation and expectations, then I think that right tail risk is a bad situation there. But the Fed firmly on hold now for now.
Yeah, Chris, talking about inflation expectations, we've been hearing about tariffs for the good part of the last few weeks. How's that going to play into the inflation picture?
Well, it's a big unknown because people are saying that this inflation number that we've just seen is also buoyed by seasonal factors in January. And if you look at things like owners' equivalent rents, which obviously make up a big part of the service start of the basket, then a lot of the sort of anecdotal evidence is that is set to fall. So, I think the Fed are saying that, this is not a great outcome. We heard that from Raphael Bostic last night as well. Not a voter, but, certainly we're in a wait-and-see mode now. Whether Trump tariffs have any kind of bearing on inflation over time as the price level is set to move is another factor. So the market just doesn't know how to price the risk around this at the moment. But I think, if we were to see another couple of CPI prints anywhere close to this, and obviously PCE being a little bit hotter, then I guess in the next few months you could see people talking about rate hikes, but at the moment that's not something that we're really too concerned about.
Yeah, talking about concern, some folks have been concerned about the tariffs, including the automakers. So that's starting to see some, I suppose, movements in terms of share prices of some of the car makers. What are you taking away from the latest earnings so far? We've been hearing quite a bit about their outlook for the year ahead.
Well, if you want to talk earnings, we go to Europe at the moment because their European earnings are coming in thick and fast, and European equities are absolutely flying at the moment. Along with Hong Kong, Hang Seng and also H shares. I mean, these are the momentum markets at the moment. We're just seeing earnings coming in thick and fast, and they're looking pretty good. But I mean, US earnings, I think, are partly underpinning a lot of the chop we're seeing. The S&P and Nasdaq are sort of moving sideways, very, very choppy trade. They're not seeing the sort of trends that you're seeing in European equities markets. But earnings have been pretty good. I mean, we're sort of coming into the tail end of earnings season. We've still got Nvidia to report on the 26th of February, but 78% of companies have beaten on the EPS line, a little bit less on the revenue line. But we've seen nearly 13% aggregate earnings growth, which is far higher than what the market was looking for pre-earnings season. So it's not been a bad earnings season. I'll also say that the level of companies who have initiated or talked about tariffs in their conference call, we're pushing up into record levels. So clearly it's a prevalent theme within the US corporate sector.
All right, Chris, with all that in the backdrop, what looks attractive to you right now in the markets for investors to take a closer look at?
So say that again, sorry?
What's attractive to you right now for investors to look at, to get into in sort of trades or investment opportunities?
Well, yeah, it's a great question. I mean, right now, what's moving and whether it can be sustained, obviously, I think it is a really reasonably mature trade is the massive outperformance we've seen in European equities and also Hong Kong. I think Alibaba's the big trade there. That's become the new AI darling, and it stock's up 47% from the low. So, yeah, they're the markets which are moving at the moment. We can talk about Europe, but the whole reason earnings, people questioning US exceptionalism, perhaps a better feel towards Russia, Ukraine, given the news flow overnight. There's a whole heap of reasons, but they're the markets which are moving, and I think pullbacks will be fairly shallow and well bid. I think gold's probably at risk of a bit of consolidation. I certainly have been chasing here, and also I think the yen's quite an interesting one from an FX perspective because that's now starting to weaken up, and after everyone got a really bit bullish on it because the Bank of Japan are looking to hike rates probably again soon. We are seeing some decent selling playing through in dollar yen or in the yen at the moment. So that's an interesting trade as well.
Alibaba on the bounce with the news that Apple has partnered it to develop AI features for iPhone users in China, and a great overview of where things are going. We've been in conversation with Chris Weston. He is the head of research at Pepperstone, helping us to break down the latest in the markets. Chris, thanks as always for your time and insights.
My pleasure. Thanks for having me on.
All right, catch up with you again soon, Chris. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.